Let's talk about Bitcoin and cryptocurrency reporting tax risks. Let's talk about what triggers IRS criminal investigation, why crypto activity is now one of the fastest ways to get you on the IRS's radar, civilly and criminally. If you traded Bitcoin, used DeFi platforms, bought NFTs, mined, staked, or moved funds between wallets, believe it or not, you've left a traceable digital trail. And the IRS is now using that trail to open criminal tax investigations at the highest rate in 20 years. Listen, you've been told that crypto is anonymous and untraceable. That's a lie. It isn't, at least not to the IRS. With new reporting rules, new blockchain analytic tools, and direct data feeds from major exchanges, the IRS can now identify unreported crypto income with remarkable accuracy. If you've made mistakes on past filings, or if you're not sure whether something you did counts as taxable, this is the video you needed to look at years or weeks ago. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA. I have a master's in tax. And for nearly 30 years, I've defended clients in high-risk audits, civil fraud cases, criminal tax investigations, and involuntary disclosure. Listen, crypto taxation isn't new, but the IRS enforcement is now more sophisticated and aggressive than most taxpayers realize. The IRS Criminal Investigation Division, CI, has publicly declared cryptocurrency one of its top enforcement priorities. Why, you ask? Because crypto often involves unreported income, improper deductions, inaccurate cost bases, offshore exchanges, pseudo-anonymous wallets, DeFi transactions with no 1099s, tumbler and cloaking software, and peer-to-peer movements that often look like money laundering to the IRS. When IRS algorithms detect mismatches between exchange data, blockchain activity, and your tax return, your tax file becomes high risk. Crypto-related investigations usually begin with one of the following triggers: unreported exchange activity. The IRS receives data from Coinbase, Kraken, Binance, and others. If you traded but didn't report gains, losses, or income, CI may suspect you did this willfully. Large or repeated wallet transfers. Blockchain analytics tools can now trace movement between wallets, even when the wallets appear unrelated. These patterns can resemble money laundering or concealment. Unreported staking, mining, or liquidity awards. These are taxable as ordinary income the moment you receive them. Unreported income from NFTs or gaming token. Marketplace data is now cross-matched with individual returns. The mixing of business and personal wallet. Hey guys, this creates a forensic nightmare, and the IRS assumes the worst until you can prove otherwise. Offshore exchanges. Foreign exchanges are turning over user data through international reporting agreements. If the IRS believes the omission of this income was willful, this will make your case automatically get referred to the Criminal Investigation, or CI for short. Listen guys, crypto is not private. Here's how the IRS tracks you. They use John Doe summonses. These are court orders that force exchanges to reveal user data that they're looking for. 1099 reporting. New mandatory reporting rules mean the IRS gets your crypto trading information and matches it to your tax filings automatically by computer. Blockchain analytic tools. The IRS is now using software that traces wallet movements, mixers, bridges, and DEX activity. Bank deposits. They're looking for unexplained bank inflows that are matched to crypto tax outs. Foreign exchange reporting. International data sharing agreements reveal offshore crypto activity. Social media and public wallet listings. NFT sales and public profiles link wallets to individuals. If your return doesn't match their data, the IRS assumes concealment. Most criminal cases don't start with agents knocking on your door. They start quietly, like this. The IRS selects your return for audit or criminal tax investigation. The examiner notices missing crypto income, missing wallets, or inconsistent records, unexplained large cash transfers, or deposits that are telltale on and off ramps to unreported crypto trading. They refer your file to CI. CI begins reviewing blockchain activity. IRS civil auditor freezes all communication. CI special agents build a criminal tax case quietly and clandestinely. You eventually receive a knock on the door or discover two IRS agents waiting for you by your car. Two agents, badges out, ask for a few minutes to talk. If that knock ever comes or that unexpected visit occurs, the criminal case is already well developed. Listen, they don't ask questions they don't already know the answers to. And they're hoping that you'll lie to them. That's a separate felony in its own right. Here's common mistakes that gets people prosecuted. The most dangerous mistakes are filing returns without reporting all wallets or exchange activity, reporting cash-out activity but ignoring taxable swaps. 1031 does not apply. Not tracking cost bases, leaving out staking or mining income, destroying records or not accounting for lost access to exchanges, fixing or backdating records, letting your accountant talk to the IRS, talking to agents without legal counsel present. The IRS is evaluating your intent, and these actions can be used as evidence of willfulness as the tax crime. That's the hardest element for them to prove. Don't make proving willfulness easy for them. Crypto taxpayers risk civil fraud penalties as up to 75%, accuracy-related penalties of 20%, FBAR penalties for foreign exchanges, seizure of wallets, freezing of accounts, criminal prosecution for tax evasion or filing false returns, money laundering or structuring charges, and most of all, prison. Crypto tax prosecution is no longer rare. It is rapidly increasing as we speak. So here's how we defend crypto cases. When we take on a crypto case, we reconstruct all trading, swapping, and wallet activity. We analyze decentralized and cross-chain movements. We identify income recognition issues. We rebuild cost bases. We correct past tax filings. We develop legal defenses for audit or CI review. We limit look-back years. We furnish forensic accountants ourselves. That way we protect communications under attorney-client privilege. If you are not under audit or criminal tax investigation, we may recommend amending the required tax returns through a service center where exposure is low, or through a domestic or offshore voluntary disclosure where the criminal tax exposure is high. We handle the entire process, including any resulting collection action. Handled correctly, we have a 100% track record of resolving crypto compliance issues before they trigger a criminal tax investigation or referral. If you're unsure whether your crypto has been reported correctly, or if you've already received a notice, an audit letter, or a criminal investigation division agent visit, don't wait. And whatever you do not speak to the IRS yourself. A single misstep can determine whether your case stays civil or goes criminal. Call the tax law offices of David W. Klasing at 800-681-1295 or visit KlasingAssociates.com today to schedule a confidential, reduced-rate initial consultation. We'll help you fix your past mistakes, protect your rights, we'll protect your net worth, and your very liberty. We're going to do this by resolving your crypto compliance issues in a manner that does not result in criminal tax prosecution. Thank you so much.